Oh, ladies and gentlemen, as we've promised, we're going to be doing the stocks to buy for the month of October. Hey, this is going to get posted on the 5th. It's not too late in the month, okay? There's plenty of time to buy some goodies. I have no clue how the market's going to actually trade on Monday, so I'm excited. I'm recording this Sunday, so there's a lot of potential reasons for the market to be super high up, depending on current events. There's a lot of reasons for it to be down. But these are still stocks that I think are interesting. Two are for sure, in my opinion, good value plays. Now, the other two, some people will find a little bit riskier. I have one speculative stock and one that some people, not for the faint of heart. It's not an investment for the faint of heart, okay? So we'll get into it. Obviously, starting off with the biggest no-brainer I've ever really mentioned. And this one hasn't been on for, a decent bit. And it's Apple. And the issue typically with me has been valuation. And I'm at a point where I feel actually relatively comfortable with the valuation on Apple relative to where the market's trading. So I think comparatively to where the market's trading, Apple is not getting a fair shake. And there's a lot of reasons for that. Obviously, still, this is a stock that has performed very, very well. If you look even year to date, big numbers, up 50% on the year, which is obviously good for a year in which, the NASDAQ's up 22%, I guess, but still outperforming the NASDAQ by 30%. Pretty good performance. And obviously, you think long term, even 5 years out, stock's up big, 300% in 5 years. I still think there's room to go. And obviously, you look at Apple, and my main thing is the amount of just quality that this company makes. They make a product that people who use the brand typically stick with the brand. They go and pay for the more expensive item because they know what they like. And there's a few key factors with Apple that I'm a huge fan of. For one's right on your screen here, the Apple Watch. The leading wearables, right? This is the number one in terms of wearables. Obviously, watches. You compare them to Fitbit. Samsung makes watches, but the Apple Watch Series 6 releasing is going to be massive. The amount of health tracking that you can do on that is pretty crazy, and that's what a lot of people get it for, obviously. Not only the health tracking, but you're able to take phone calls, listen to music, whatever you want to do on your watch, you can do. I'm not a wearables guy myself, but frankly, the market is going to a mega wearables category. Everyone loves wearables. I don't know what's going on with people. Obviously, you have your normal iPads. Nothing's too crazy with iPads. Macs, good old Apple computers, therefore known as Macs. Not big sellers for them. MacBook Air is better, or MacBook Pro. It's a better seller for them, obviously, than desktop computers. They don't sell a lot on Macs. Sorry. Not trying to be rude to them, but it's not their main business. You have iPads, not a segment that's been growing massively, but still good. iPhones, pretty excited, I can't lie to you. First off, the iPhone SE, going to be a big seller. But secondly, you talk about the next generation of iPhones, 5G iPhones, and what that means for the company. Could this be another mega cycle for this company? Because obviously iPhones, not the main source necessarily people talk about for this company in terms of revenue, but it is still the number one revenue provider for the company. It's phones, and I don't think in the future it's going to be that way. Not because phones are going to underperform, but because other services and areas are going to outperform. So I think 5G is big because people want to get access to 5G, and it'll get them to buy phones. But obviously the 11 was a super successful one, so they may wait 2 years. It all depends. People love spending money. Obviously with iPhones, you think about accessories like AirPods, the number one wireless headsets, wireless earphones being AirPods, and obviously the Pros for people who like a little bit of a, whatever that weird earpiece is that always gathers earwax, and it's kind of gross. You got to clean them. Sometimes they fall off and you lose them forever, and then you have this weird feeling in your ear because you don't have a thing to replace it, even though they come with a bag with usually like two different replacements, but you always misplace that bag because why would you just save that bag? That's just how it is. We talked about the Apple Watch. You look at, obviously, Apple TV. Ooh, Apple TV. Big push for them, obviously, is services are the key for Apple. Services are the absolute key. So streaming services to compete with, your Disney's, your Netflix, Apple TV Plus. They've got a lot of originals, and they're just trying to get partnerships to get more content on there to get people to do it. Apple TV, nice stuff. Obviously, they offer 4K. The biggest thing now I want to say is going to be the Apple One bundle that they just announced, which is going to obviously offer a few different plans. So, wow, even better than the original. Obviously offers you Apple Music, Apple TV Plus, Apple Arcade, iCloud, Apple News, and Apple Fitness. All of these can be bought in one subscription plan. And obviously, you look at the pricing action. The Premier, which includes all of these services, is going to be $29.95, up to 5 people. The family plan includes just the music, TV, arcade, and iCloud, up to 200 gigabytes for $19.95. And the individual plan is $14.95, and you get music, TV, arcade, and iCloud up to 50 gigs. 50 gigs. I can't say that word. So services is the main thing for this company, and that's what I wanted to really argue here, is that services will become the leading revenue source for this company, and that's why I like Apple so much. You talk about valuation on Apple, obviously nearly a $2 trillion market cap on this company is absolutely insane. I can't lie to you. But overall, forward PE under 30, just barely under 30. But I think that's relatively cheap valuation for the entire market. Even though it is expensive for my usual tastes, I can't argue with it, with what the company does. And you look at the financials, and you see, obviously, there was a decline in 2018 to 2019. You saw a little decline. But now we're back up, baby. Trailing 12 months at $273 billion. The numbers just keep rising, right? They're back on a big growth pattern. We're looking for full year this year. I could see, in between the 5 to 10% range. It'd be lovely to see that, which is crazy for a company making $270 billion, but I'm seeing it. That's all I'm telling you. Obviously, we see trends with revenue where they level out for a little bit. Like in 2016, they leveled out to 2017. Then we saw a burst in 2018. Then we leveled out again in 2019. And I think 2020 is another breakout year for them because they've really benefited from everything going on because people are buying their services, they're buying technology, everything like that. So, definitely good stuff. And obviously, one thing to mention is going to be the dividend with Apple. Nothing crazy, but a 0.73 yield, 20.5 cents paid on this, and a payout ratio of only 25% means they've got room to grow and 8 years of growth behind it. So I think this is a dividend that will be growing, just to mention that. That's it for Apple stock. Our second stock is going to be Tapestry Brands, Tapestry Incorporated. So Tapestry, obviously a fashion company. Why do I choose this stock in particular? Well, at a share price of $15.71, 52-week low at $10.18, and 52-week high at $30.40, I think that there's some value in this stock for the long term. Mid to long term, we're talking about 2021 is when I see recovery on this stock, but I think the recovery could be very nice. And on top of that recovery, there are other benefits with the stock we'll get into. But just to take a look at what Tapestry is, strong brands on this company, what they own. Obviously, Coach, you're talking about your purses. Everyone loves a nice Coach purse, okay? Well, I don't personally, but ladies love a Coach purse. Kate Spade, could you please, maybe consider having your hair not rainbow buns? I mean, I'm not trying to be rude here, but rainbow buns aren't necessarily the... I just don't know if it's the style I think is the best style for anyone in the world, regardless of who you are. But Kate Spade, obviously great brands here, and Stuart Weitzman, you're very more fashionable brands necessarily. Your professional brands more with Stuart Weitzman. So they have some good brands. I can't lie to you. Good brands here. You look at valuation wise, Market cap of 4.5 below. 4.5 below. Trading very cheap, dirt cheap. Trailing PE of 10.8, forward PE of 8.7, dirt cheap. And you look at the financials. I mean, obviously, I talked about a $4.5 billion market cap. Trailing 12-month revenue, which is down massively because of, well, pandemic. Trailing 12-month revenue is still $4.9 billion, which is still over the market cap as is. So it's already looking juicy. That's juicy. That's the sound of juicy. You ever heard the song WAP? It was about juicy. Wet prices. Wet stock prices. WSP is what I think it was. They just mistyped the A. They mistyped the S and put A accidentally because it was next to it. It was supposed to be WSP. Wet stock prices. They're very exciting, okay? These are probably the best stock prices you've ever seen. It's true. But could be cheap. Could be cheap stuff. I did want to obviously mention the most recent earnings because you got to mention it. Revenue fell 50%, which is not a shocker for a company like this, but they did beat in terms of earnings. I did want to show that, and on an adjusted standpoint, they beat on profitability as well. So they have some people in their camp, okay? A lot of analysts are actually turning positive on this stock, saying 2021 could be good stuff. 1 year price target of 26 from Piper Sandler. I'm more of an Adam Sandler guy. I don't know who Piper Sandler is. I guess that's maybe Adam Sandler's wife in another world. But I thought Piper, whoever, was married to like Tony Stark or something. I don't know. Am I remembering this wrong? This is a whole twisted society. We're living in a simulation. But anyways, people are turning positive. Tapestry, though, my main benefit that I think could exist for this stock, I need to mention this right now. It used to be a fat dividend payer. PHAT dividend payer, okay? Fat dividend. But you've noticed they've cut their dividend right now for the time being, which is not a shocker, dividend history-wise. They haven't paid a dividend, that's right, since their March quarter. Not a shocker. So 2 quarters now they've gone without a dividend. When it comes back, I don't think it'll be necessarily as high as this 33.75 number. I don't think it will. I think you'll start a little bit better like when they did in 2000, maybe around 2012, 11, to the 20-cent range, around there. And I think they build from there. But it's been pretty consistently paying this 33-cent dividend, which was a beautiful yield, by the way, even for the price back then in the 20s. Beautiful yield on the stock. Tapestry is one to look at, ladies and gentlemen. Hold it for the long term. You'll be happy whenever you get stock appreciation and dividend in the future. That's my main point. My next stock is an interesting one. NRZ, New Residential Investment Corporation. Some people are going to think it's a crazy one because this is a crazy time to be investing in a company like this. But I have my reasoning. So NRZ, should mention 52-week low at 291. Should have bought it then. 52-week high at 1766. It's been a crazy year for this stock, no doubt. And there's reasons for it. Obviously, on the year, down still around 50%, which is, I think you can actually justify it. I can't lie to you. You can justify it where other stocks have really recovered quite a bit. I mean, obviously this has recovered 145% or something, but overall in terms of price, you saw a much bigger drop off the initial, you saw an 81% decrease from February to March. So the recovery, of course, is higher in terms of percentage, but dollar value, not necessarily there. What I like about the stock, first we look at the company itself. It's a company that makes money off of, well, mortgages, and they pretty much purchase mortgages and loans, and that's how they make their money, and their goal is obviously to pick good investments there. So, should mention too, book value on this stock as of the most recent quarter is $10.77, and you know what it's trading at? That's right, $8.04. What can I say? Dividend yield right now 5.3%. Beautiful. Just recently raised, by the way. What can I say? Their portfolio consists of $18.5 billion worth of loans and mortgages right now, and over 4 million customers. These statistics you can't trust on Yahoo Finance. These are just wild statistics. I don't know where to go from this, but obviously P ratios, typically you don't judge these real estate investment trust companies off these. So I just wanted to show that it's weird statistics on this company. Price to book might be realistic, but I don't know. But we like to look at the most recent earnings, in which they actually saw a 4.7% increase year over year. That's right. And you saw this book value change. And again, a big decrease year over year, but overall book value, nice to see it rising. And overall, near profitability, which means dividend is pretty likely. What can I say? The dividend is my key for this. You look, obviously, they used to be paying 60 cents. We look at the dividend growth. You want to look at the dividend history for this bad boy. Was paying 50 cents for a while. If you look all time, it's a troubled dividend stock, okay? Obviously, 2014, rough year for them, so they cut the dividend quite a bit. Then they rose it back up the next year. We're in one of those phases right now. If you're just looking a little bit closer, let's go in the last 6 months. Let's go in the last year, how about that? Where they saw overall a complete wipeout and a decrease to 5 cents. They then increased it 50% to, or 100% to, that's right, 10 cents. Then they increased it 50% to 15 cents. Next quarter, I foresee another increase, probably to 20 cents. I can't lie to you. I think it's going to be a increase to 20 cents, which will be another beautiful increase. And I think they're going to keep that incremental increase for a while until we see recovery, which will probably be a recovery in this market will likely be next year. The housing market's very nice right now as far as sales are concerned. So mortgages, they can see benefit from. But again, the issue is with the issue is with the market itself in terms of loan forgiveness as well as mortgage rates, which hurt them. It does. But I think when we find recovery in the economy, you will see obviously better numbers posted from this company. So that's my thing with NRZ, and that's why I like it. My spec stock is going to be Energous, okay? I've mentioned it before. Energous, ticker symbol WATT. Crazy stock, obviously, which is a future play. This is not talking about right now, okay? We're not going to be, saying that this thing is worth something right now, but I look at holding this thing for several years, at least 5 years. I said the same thing for Neo, and I sold a little bit early. This time I'm serious, okay? This time I'm serious. I'm in a little bit under $3 a share right now in my position. Looking to add more. I don't think share price is going to be major in the recent future, and I think it can go down. I think it can. But you look at what the company is, and they focus on wireless charging 2.0, which instead of setting your product on something to charge it, it's pretty much setting it in the general vicinity to allow those products to charge, which is pretty darn cool. This is, I think, the future, obviously, of wireless, and if they obviously maintain patents on it, which right now they do have patent, but if they maintain exclusivity rights, and they can be the first one to market, this company has a lot to gain. There's a lot. Right now, you do need to mention that really all of their revenue, they don't really have a consumer product. All their revenue is really getting made from contracts like with the military. So that's where most of the products are being sold. But they do have the technology it's actually functional technology to an extent. Not all of it is 100%, to plan right now. I will be honest with you. And that's why it's a speculative stock. You look at the valuation, which is obviously incredible. $114 million market cap, and here you go. This is no joke. $210,000 in terms of revenue. Yikes. So there's a lot to say for that. $210,000 only, but you're trading at a market cap of $100 million. Scares a lot of people off in terms of valuation. The valuation is extremely blown out. But again, I think the stock receives a lot of hype. And I do think in the future, when this company can produce a product for consumers, this stock price will likely go bonkers. I think it'll go bonkers. And I could be wrong. But that is entirely my estimation on this stock. You look at some of the recent partnerships with Zentris Wireless. So they're developing ruggedized products for demanding military application using Energous' radio frequency based charging. Again, this is wireless charging 2.0, baby. So instead of having to set something on something, it's just changing. It's charging because of the frequency that is getting let out by this. And again, stick your head in between it. You may have, a little bit of cancer develop. What can I say? It might be the case. But we'll see what this product looks like in the future. It's the future of the product. That's all I can tell you. But again, they also just upped their patent here, which gives extends the charging zone to within 1 meter of the transmitter. 1 meter away you can be charging your device. Seems pretty crazy, I know. But I hope still that you enjoyed all of this. These are your stocks to buy. These are your stocks to buy for the month of October. Hope you enjoyed. Spooky, spooky.